Hello everyone, my name is Alex. Welcome to my channel. I hope you're doing well. I hope you're staying energetic, as today we're going to be talking about energy stocks and what are the best high-dividend stocks in this sector. Investing in companies from energy sector comes with its own challenges for income investors. The volatility of the energy prices in the last couple of years caused a lot of companies to either slash their dividends or completely cut their dividends all the way down to zero. And that's what you need to watch out for before investing in those. During the market crash of the last year, a lot of energy companies took initiative in order to cut their losses, improve liquidity and cash flows. But there are actually energy companies who are immune to the price of crude oil or commodity prices. We're going to be looking at top 3 companies. They pay a lot of dividends, they can sustain their dividends, they've been increasing their dividends for the last at least 5 to 10 years. And the companies that you can constantly rely on. If you equally invest into these 3 companies, your energy sector will be set. You'll be getting 6.7% of dividend yield from the energy sector alone. That's pretty good. So the first one is probably not a surprise, is going to be Enbridge. The ticker symbol is ENB.TO. Probably a lot of you, most of you know what this company is all about, why they're the best. I think actually the best on the TSX right now to invest to for dividend investors. But I couldn't not include it into my list today. This company has increased their dividends at a rate of 10% per year since 1995. Right now the company is traded at around $45–46 and has a forward dividend yield of 7.3%, which is great. We're going to be getting a lot of dividends from Enbridge. And I think Enbridge is actually one of the first stocks I added to my portfolio, and I've been contributing to it since then. Also, despite the crisis of last year, Enbridge still increased their dividends by 3% recently. Also, the company is optimistic to improve their cash flows by 3 to 5% annually through 2023, which means we can rely on dividend increases in the future as well. Let's take a look at the metrics where the company is today. The market cap is around $93.5 billion, which is huge. The company keeps growing year over year. The current dividend yield, as I just said, around 7.3%. Give or take. They've been increasing their dividends for the last 25 years. This is crazy. There's great news. So we can expect this dividends being increased in the future as well. The payout ratio right now is not the best. It's at 218%. It means they're still recovering from the last year market crash. And Enbridge continues to heavily invest into capital expenditure projects, which will improve their cash flows in the future. The 10-year share price appreciation is around 51%, which means that we're still seeing this gradual, consistent share price appreciation over the long term. That's what we want as income investors. The beta parameter is 0.93, which means that it's pretty safe investment from the share price volatility standpoint. So if you don't have Enbridge yet in your portfolio, right now is one of the best time actually to invest into them because they still haven't fully recovered yet from the market crash of last year. There's still 5–10% expected growth throughout the next year or two. Let's move on to the next one, which is Pembina Pipeline Corporation. The ticker symbol is PPL.TO. And I talked about Pembina Pipeline Corporation before, but I talked about the monthly paid dividend companies on TSX. Go check it out. Yeah, they're paying dividends every single month. How cool is that? So Pembina Pipeline is a leading midstream and transportation service provider in North America. The company is known for providing safe and cost-effective transportation solutions since the last 6 decades. It owns an extensive network of pipelines that transport crude oil, natural gas, and natural gas liquids produced primarily in Western Canada. Pembina is an infrastructure company with a forward dividend yield of around 6.7%. In the fourth quarter of 2020, they reported revenue of $3.4 billion compared to $3.1 billion to the same time a year ago. The company's cash flows actually backed by contractual assets that allow them to increase their dividends by 4% annually in the last 12 years. Let's take a look at overall metrics for Pembina Pipeline Corporation. The market cap of the company is around $20 billion. The dividend yield is around 6.9% as of today. They've been increasing their dividends constantly for the last 9 years. So yeah, they're a part of Dividend Aristocrat list as well. I actually have a video where I talked about the best Dividend Aristocrats companies on TSX right here. Go check it out. So these are the companies that increase their dividends for at least 5 consecutive years. The payout ratio is around 70%, which is pretty sustainable for a company like this, and also consider what the market situation right now. The 10-year share price appreciation is around 59%, which is pretty good. And also considering that the company has not fully recovered yet, since the market crash of last year, you can still invest into it with a 30% discount. How cool is that? You gotta add it to your portfolio for sure. I have it and I rely on their dividends every single month. The better parameter is 1.72, so the share price is a little volatile, but it's not that crazy as long as you're a long-term investor. The next one on the list is the TC Energy. The ticker symbol is TRP.TO. TC Energy has been one of the best dividend-paying companies on Toronto Stock Exchange. It has increased payouts for 21 consecutive years and recently announced a 7.4% increase in dividends for 2021. Because of their durable business model, the company is super confident about their dividend payments throughout the next couple of years. The company is financially strong and quite profitable. The share price for TC Energy right now appears to be very undervalued. It's at around $57–58, where pre-market crash it was around $75. There's a huge opportunity here for the share price appreciation in the next year or two. And don't worry about their dividends, they can totally sustain them. The payout ratio for the company is around 60%, so they still have this cash sitting around they can reinvest in their business in order to grow it. So let's take a look at our metrics now. The market cap for the company is around $57 billion. It's pretty good, right? The dividend yield as of today is around 5.9%, which is pretty good. And they've been increasing their dividends for the last 21 years. So this is type of the company that keeps paying dividends, keep increasing their dividends over the long-term period. The payout ratio, as I just said, around 60–65%, which is pretty good, pretty sustainable, right? The 10-year share price appreciation is around 44%. And as I just said, right now they're super undervalued. So right now is one of the best buying opportunities for TC Energy. The better parameter is at 0.74. So in terms of share price volatility, they're pretty safe. So if you equally invest into these three companies, your energy sector will be set. You'll be getting 6.7% of dividend yield from the energy sector alone, right? That's pretty good. And say if you invest $5,000 in every of these stocks, you'll be getting $1,000 in dividends per year, which is a pretty good start. And moreover, this payout is bound to increase year over year. And that's all about energy sector. You want to look at and see what other sectors provide, click a link above. I'm totally going through those there. Thank you very much for joining me here. Like this video so everybody knows that investing is important and everyone needs to invest. Subscribe to my channel, hit the bell so you're notified that my next video is out, and I'll see you around. Cheers, bye.